True passive income only comes in a couple of forms, including interest on cash, rental property cash flows, and what we'll be speaking about in today's video being dividend income from investments in the stock market. I've been investing in dividend stocks for over 5 years, documenting many of these positions along the way on my channel, and what's great about dividend income is that even while the market might be down 15 or 20%, like what we're seeing right now, well, dividend checks still keep rolling in every month or every quarter if chosen strategically. Just take PepsiCo for example. They've maintained and raised their dividend distributions for over 51 years, and that's throughout many of the worst recessions that we've seen in modern history. That's just one of the many benefits that dividend investing has to offer. So in today's video, we'll be covering 5 dividend stocks that I personally hold in my own portfolio and that I've continued adding to over the years. And it should go without saying here that just because I hold these positions in my own portfolio, this doesn't mean that they're right for you based on your goals as an investor. Alright, so starting with a heavyweight here in the Canadian market as well as in my own portfolio, we have Telus Corporation, which does trade on both the Canadian as well as American stock exchanges. Now, the reason why Telus has been a great dividend stock to hold over the years and continues to be moving forward is because of the company's underlying financial performance, which is translated over into stock and dividend performance for investors. In fact, Telus is one of the 3 largest telecommunication companies in Canada that together hold an oligopoly, meaning Telus does have a major hold on market share, currently sitting at around 30% of the Canadian market. And while the stock's price is currently down roughly 18% from all-time highs, that doesn't change the fact that its performance has been great over time and now provides investors with a nice 5% dividend yield. Bottom line, the company's managed to continue increasing their footprint across the country and has thus increased their revenues as well as shareholder equity values year over year, which have made it a fantastic dividend growth stock to hold. I currently hold 364 shares of Telus, which pays me around $510 per year in dividend income. If you've been watching my channel for a while, then you would know that I'm a residential real estate investor with many properties and several renovation projects on the go. But the thing is, at the current stage of my investing career, I'm only able to purchase smaller multi-family properties in the sub-$1 million range, meaning my portfolio is not getting exposure to what I believe will be the second driving force in real estate over the coming decades, being industrial property. So this is where a real estate investment trust such as Granite REIT, ticker symbol GRT.UN here in Canada, comes into play, which allows my portfolio to still gain exposure to this facet of real estate without having to actually purchase industrial properties, but also benefiting from monthly dividend income. Now, by the way, there are hundreds of different REITs to choose from, many of which do also specialize in industrial property. This is just one REIT that I've personally been investing in over the years and continue doing so because I like the trajectory that the company is on. Similar to Telus though, the stock price for Granite REIT has come way off from all-time highs, now sitting around 20% down, but that's more of a testament to the interest rate fluctuations more than it has anything to do with the growth of the underlying company. In fact, the company's continued acquiring and developing properties, thus increasing shareholder equity drastically over the past couple of years, and have continued increasing their top line and funds from operations, which is what you want to see from a real estate investment trust. But even considering the stock price being down, they've maintained their dividend increases, which is now translating over into a nice 3.8% dividend yield. I currently hold 63 shares of GRT.UN, which pay me right around $202 per year in dividend income. Alright, moving into the third dividend stock that I've been holding for years and continue adding to periodically for their great dividend, we have the second largest bank here in Canada, being TD Bank, ticker symbol TD, and this is genuinely just one of the main dividend stocks I've been holding in my portfolio for years. Now, the reason why I personally invest in TD over some of the other bank stocks available in Canada is because I've been a customer for over 15 years, and the company itself is extremely solid financially. Their financial performance speaks for itself in regards to revenue and net income, while their shareholder equity has been drastically increasing year over year. All of this has allowed TD to continue distributing, but also raising their dividend for over a decade, with currently nothing in its way to maintain this trend, leaving their dividend yield at around 4%. Now, in parallel to the 2 previous stocks that we just looked over, TD's stock price is also off quite a bit from all-time highs, but this isn't anything unusual considering the entire market was pumped up from pandemic era investing. I currently hold 91 shares of TD Bank stock, which pay me around $350 per year. Moving into the fourth dividend stock here, this is an OG position that I haven't spoken about on the channel in quite a while, but that I've continued maintaining my position in because this is truly a great dividend distributing company that's maintained their dividend growth streak for over 50 years, which is a big feat, at least here in Canada. The company I'm speaking about here is Fortis Incorporated, ticker symbol FTS, which is an electric utility company that operates all across North America, including even the Caribbean. Now, by no means will this stock provide monumental returns in the capital gains category, although it still performed quite well over a longer time frame. But where it shines is with its dividend distributions, which have continued increasing every single year for over 50 years. This means that regardless of the economic climate that we end up finding ourselves in, well, you can almost guarantee that Fortis will maintain and even continue increasing the dividend distribution, which as an investor, you can really start counting on that income. I currently hold 117 shares of Fortis Incorporated, which pay me around $264 per year in dividend income. And finally, the fifth and last dividend stock in today's video is another Canadian heavyweight dividend player, this time in the financial services industry, the company being Power Corporation of Canada, ticker symbol POW. Power Corporation of Canada is a management and holding company that focuses on financial services in North America, Europe, and Asia, with core holdings in the insurance, retirement, and wealth investment management categories that we can clearly see in this organizational chart. Now, as with most stocks, Power Corp stock is also down roughly 17% from all-time highs, but their dividend yield is quite high at 5.5%, making it a great addition to a dividend portfolio, but this is very much a dividend-focused investment over any form of growth. And finally, I hold 114 shares of Power Corp stock, which pay me around $225 per year in dividend income, which give a grand total when combined together of $1,560 per year, or around $130 per month in dividend income between these 5 dividend stocks alone. It should also be noted that I do hold a handful of other dividend stocks and dividend focused ETFs. These are just 5 of the main individual stocks that I hold in my portfolio and that pay me the most over time. If you want to learn more about setting up your own dividend portfolio, then I highly recommend that you check out this video right here that will bring you through all the steps necessary. Hey, by the way, if you're interested in learning more about the intricacies of dividend growth investing, I've made a full and extensive course over on Skillshare. It's entirely free for you to take if you're interested on a 1-month free trial. You can find a link down below in this video's description. The course covers everything you need to know and all the steps necessary to set up a portfolio and understand the benefits of dividend growth investing for success in your investing over the long term. And if you want to take it one step further, I've also made another completely free course that's available on Skillshare as well on that same 1-month free trial, covering everything you need to know for properly navigating the stock market on your own as an individual investor, and then crafting a portfolio that's actually even suitable for your needs and risk tolerance as an investor. So once again, both of those courses are available for free to you over on Skillshare. There's a link to both down below in this video's description. On that note, thanks a lot for watching, and I'll see you in the next one.